Hello everyone, and a very warm welcome back to the channel. Whether you're a long-time subscriber or this is your first time joining us, I'm thrilled to have you here. I'm Professor Roxanna Ezenekwe, and this is your AI Weekly Briefing. In a world that's changing faster than ever, staying informed isn't just an advantage, it's a necessity. Each week, we cut through the noise and the hype to bring you the most significant developments at the intersection of artificial intelligence, financial literacy, mathematics, business, and education. My commitment is to break down these complex topics into clear, understandable, and most importantly, actionable insights. Because my goal isn't just to tell you what happened this week. Is to help you understand the deeper implications, the why behind the what. It's about connecting the dots so you can see the bigger picture and feel empowered to make smarter, more strategic decisions in your classroom, your business, and with your personal finances. This is about turning information into intelligence. Today, we have a packed agenda that touches every one of these critical areas. We'll kick things off by dissecting the colossal capital expenditures from big tech. We're talking tens of billions of dollars being poured into AI infrastructure. We'll explore what this means for the market, for investors, and for the very real constraints on energy and resources. Then, we'll pivot to the world of finance, examining how sophisticated AI models are becoming our first line of defense against financial fraud, and what compliance challenges arise from these new technologies. From there, we'll dive into the world of education, looking at practical strategies for using AI to create more effective and equitable student assessments. For the entrepreneurs and business leaders, we have a segment dedicated to AI-powered workflows that can streamline your operations and unlock new growth opportunities. And finally, we'll address the crucial conversation around AI oversight and governance, discussing how we can build guardrails to ensure these powerful tools are used responsibly and ethically. It's a comprehensive look at the forces shaping our future. So grab your coffee, get comfortable, and let's get into it. Welcome to AI Weekly, where we cut through the noise to bring you the analysis that matters. This week, we're diving deep into the high-stakes world of AI investment, exploring how AI is transforming finance and looking at the critical role of mathematics in building the next generation of intelligent systems. We'll also cover practical applications for education and entrepreneurship, and the growing importance of AI governance. Our top story, the AI spending spree continues, but the mood is changing. The titans of tech, Microsoft, Amazon, Google, Nvidia, and others are pouring hundreds of billions of dollars into the foundational pillars of AI. We're talking about vast data centers, powerful custom-designed AI chips, the cloud computing fabric that connects it all, and the immense energy infrastructure required to power this revolution. The capital expenditure, or CapEx, is staggering. In the first quarter of 2024 alone, Microsoft and Google each reported CapEx of over $12 billion, with a clear message: they are spending whatever it takes to win the AI race. These companies are betting that AI will be the largest technological shift in a generation, a platform on par with the internet or the smartphone. The strategy is to build an insurmountable lead in infrastructure, creating a powerful ecosystem that developers and businesses will flock to. The long-term vision is clear: dominate the next era of computing. But something is shifting in how investors are reacting. For the past year, simply announcing massive AI spending was enough to send stock prices soaring. Now, The market's patience is wearing thin. Spending alone doesn't impress them anymore. They're asking one tough question. Where's the return on investment? Wall Street analysts are calling this AI's prove-it phase. The honeymoon is over. This is the moment companies have to demonstrate that all this monumental spending actually translates into tangible, growing profits. The timelines for this return are becoming a major point of contention. While CEOs talk about multi-year investments, investors are looking for results in the next few quarters. Let's look at two contrasting case studies. First, Microsoft. The company has been lauded for its early and aggressive integration of OpenAI's technology. Its earnings show promising signs. Revenue from its Azure cloud services grew 31%, with a significant portion attributed directly to AI services. Products like GitHub Copilot and the AI features in Microsoft 365 are already generating billions in annual revenue. Microsoft is successfully showing a direct line from its AI investment to its bottom line, which has kept investors largely confident despite the massive spending. Now, consider Alphabet, Google's parent company. While its cloud division is also growing, the market has shown more skepticism. Investors are concerned about the cost of integrating AI into its core search business without a clear model for increased revenue. They see the massive R&D and infrastructure costs, but the path to monetizing these new AI-powered search experiences isn't as straightforward as Microsoft's enterprise software model. The market is essentially telling Google, you're spending like Microsoft, but you haven't yet proven you can profit from it in the same way. Adding another layer of complexity is the looming constraint of energy. These AI data centers are incredibly power hungry. Some analysts predict that the AI industry could consume as much electricity as a country the size of Japan within a few years. Securing enough power is becoming a critical bottleneck, potentially slowing down expansion and driving up operational costs. This isn't just a financial challenge. It's a fundamental physical limit that companies must navigate. So, why does this matter to you? If you're an investor, a business leader, or just trying to understand the future, the key is to look beyond the hype. Pay close attention to corporate earnings calls, not just the splashy headlines. Listen for specifics on AI revenue, customer adoption rates, and profit margins. The companies that thrive in this prove-it phase will be the ones that can demonstrate a clear, profitable, and sustainable path from their massive AI investments to real-world revenue. The era of blank checks for AI is ending. The era of accountability has begun. Banks are using AI for fraud detection, investment analysis, customer service, risk management, and financial forecasting. But here's the part that doesn't change. AI is only as good as the person using it. It can process millions of data points in seconds, but it cannot replace judgment. Understanding risk, understanding debt, understanding how to actually build wealth. Those are still human skills, and they are more valuable now, not less. A lot of people assume AI makes math less relevant. It's actually the opposite. With powerful tools that can instantly solve complex equations, it's easy to think that the need for human mathematical skills is fading. We see AI as a magic black box, something that and we forget what's happening under the hood. But the truth is, the rise of AI is making a deep conceptual understanding of mathematics more critical than ever before. It's not just about being able to calculate an answer anymore. It's about understanding how the answer is derived and whether it's the right one. Every single AI system is built on a foundation of mathematics. Think about it. Probability and statistics are the bedrock of machine learning, allowing models to make predictions and quantify uncertainty. When an AI decides if an email is spam, that's probability at work. Linear algebra is a language of data representing everything from images to text as vectors and matrices that algorithms can process. Optimization is the engine that drives learning, with algorithms constantly fine-tuning themselves to minimize error and improve performance. Without these mathematical pillars, there is no AI. It simply wouldn't exist. As a math educator, I see this firsthand. Our job is fundamentally changing. For generations, we taught students to be human calculators. Now, that part of the job is automated. We're not just teaching them to calculate anymore. We're teaching them how to think critically and mathematically. We're shifting from teaching computation to teaching conceptual understanding. AI can generate an answer, often in milliseconds, but it can't tell you if you've asked the right question. It can't interpret the result in a real-world context or spot when a statistically sound answer is ethically problematic or nonsensical. That requires a human. Our role is to develop thinkers who can design, question, and validate the systems that AI operates. That is a skill that will never be automated away. Schools and universities are redesigning how they teach and assess students. Instead of asking, "What's the answer?" more educators are asking, "Explain your thinking." Students can ask AI almost anything, but they still need to know why an answer works, when it's wrong, and how to verify it. Critical thinking is quickly becoming the most valuable skill in education, arguably more valuable than the answer itself. Entrepreneurs are using AI to write marketing content, do research, build websites, create presentations, and automate the repetitive parts of running a business. That's genuinely good news. AI lowers the cost of starting a business, but it doesn't build trust. It doesn't replace leadership, customer relationships, or integrity. Business still runs on people. AI is a tool in your hand, not a replacement for you. The biggest theme this week: governance. Governments, universities, banks, and businesses are all asking the same question: how do we use AI responsibly? Human oversight isn't optional. AI makes mistakes. It can hallucinate. It can be manipulated. The professionals who come out ahead won't be the ones who use AI the most. They'll be the ones who know how to verify what it tells them instead of accepting it blindly. Here's what this week's news really teaches us. Artificial intelligence isn't replacing intelligence. It's changing how intelligence gets applied. The professionals who succeed won't just know how to use AI. They'll know how to think critically, understand the math behind the tools, make wise financial decisions, and lead with integrity. That's the future, and that's exactly why I believe math, financial literacy, and AI belong together. If this week's briefing was valuable, hit like, subscribe to the channel, and share it with another educator, entrepreneur, or lifelong learner who needs to hear it. I'd love to know which story this week hit home for you. Drop it in the comments. Remember, AI can calculate the answer. Great professionals develop the wisdom behind it. Thanks for watching. I'll see you in next week's AI Weekly Briefing.